Welcome to Momentum Monday. Today is July 10th, 2022. Howard, how is the inflation in popcorn?
I just made a great bowl. Great bowl. San Diego, man. How you doing, buddy?
Doing pretty good. Just enjoying the summer.
San Diego. You playing any volleyball today?
Yesterday I did, yeah.
And showed no mercy.
Yeah, I'm pretty good at that sport. Yeah.
I was working on with my trainer and we were doing some Bulgarian deadlifts. Is Bulgaria known for its deadlifting?
It's probably a Romanian deadlift. It's probably Bulgarian split squat. It's
Romania, Bulgaria, tomato.
Yeah, I mean, there is a story behind it, but probably today is not the the right venue for that.
Right.
So let's talk about the market. So I mean, short week, a pretty strong week last week. Typically, the 2 weeks after the 4th of July are two of the strongest every single year, and this year wasn't any different. We saw continued strength in tech. And actually in many other areas. The interesting part was that the worst performing sector in the past year and a half, like biotech, software, recent IPOs, they gained the most in the past week, which is kind of typical for bear market bounces.
Yep.
And but what's curious that they kind of held and continue to go up despite the interest rates kind of starting to go up again in the second.
Yeah. And the US dollar was still strong too.
Yes. And typically TOT, which is the long-term treasuries treasury bond ETF, it's been a leading indicator so far this year. Yeah. So anytime I see it go down, therefore interest rates go up, I kind of a little bit more cautious because it's been a leading indicator for stocks, for tech especially. So we'll see if next week things have changed. But last week, most of the dips were bought. I mean, nothing major is really setting up. There are not really that many good setups near the 52-week high list. Just a few of them. I'll show you a few. Shockwave, kind of trying to build a new base above its 250-day moving average.
What's the weekly look like?
Yeah, this is the weekly. Okay, let me pull this actually.
Quite a run.
So yeah, I mean, obviously they had quite a run. It's one of the few stocks that kind of continue to have earnings and sales growth, and it's above its 50-day and 200-day moving average, setting up. I mean, it's not an easy stock to trade. The bid-ask spread is like a couple dollars or so. LNTH again in the same space.
Wow.
Holding kind of well. I mean, nothing amazing. And obviously a lot of the defensive stocks are doing well, like managed care names are near 52-week highs, which these are really slow movers. There's nothing really to get excited there.
No, but I mean on a monthly, where are they on a weekly and a monthly?
Even on a monthly, they're just very slow movers. So I guess it depends on your time frame.
Still a 20 bagger since 08. 30 bagger.
Yeah, I mean, yeah, you can make that argument. Yeah, that if you're a really long-term investor, you probably did well. What is it? 3 to 80. Yeah, you're right. Actually, they did really well since 08.
Yeah.
Since Obamacare. So,
right, United Healthcare too is like the best performing stock, but
United Healthcare, let's check. Yeah, I mean, 20 bagger or whatever.
Right at the Obamacare, was it a 30 bagger?
Yeah, you're right. Actually, it's a really consistent uptrend, really on a
no volatility. Everybody's got to pay the freaking medical, and then all the it's interesting. All the I signed up for one medical because I was really sick.
Yeah,
and these things are the other way. Well, it's had a bit of a rally.
Yeah, I mean, last week it went up what, like from 8 to I don't know, 1150. That's like what, almost 50%.
You can just see, no matter what tech's coming along, like the old guard just has like a lockdown on this. When the biotechs do?
Oh, the biotech is one of the leaders. So definitely, as I said, one of the worst hit sectors since February of last year are outperforming. It's easily clear that 80 level was technical resistance, and it's now above its 20, above its 50. It's definitely one of the leading sectors. So if when the averages, the market averages bottom, this will probably be one of the leading sectors. What I also noticed,
The averages are finally crossing. Yeah, we're finally starting to see like hints of a bottom.
I mean, the Nasdaq is still
Not in the Nasdaq yet.
still below its 50-day moving average, small caps as well, and SPY as well. So, I mean, this is the time to watch really for individual stocks,
Yeah.
names that can potentially be future leaders, because they're going to form basis while the averages are
So
bottoming.
right now it's like medical diagnostic stuff. So
Yeah, this is the field. So we have a few biotechs near 52-week highs, like Halozyme and Harmony. This is definitely one of the strong sectors, like just medical in general, in the different subsectors in healthcare.
no, look at the earnings, Jesus. So the Harmony, so HRMY, what's the weekly look like? I mean, I don't know the sector.
Yeah, it just made all-time highs from a big base.
That is a good looking breakout, dude.
Yeah.
Wow. All right, I got to put that on mine.
All right, write it down. So last week I kind of noticed that the vaccine stocks, COVID vaccine stocks, started to perk up, and Moderna and BioNTech, they went up like 20% in a week. And as you know, the number of cases is rising again around the world. There is a new strain, and China just closed all of their casinos for the first time in 2 years. So it's
Did they really?
That's what they say. So it seems like like the real deal. I mean,
You know, everybody here has it. New York has it again, but I mean,
yeah,
I don't know if the hospitals are full.
yeah, hospitals are not full. I mean, but the thing is that even people that are fully vaccinated, have boosters and stuff, they're really having it pretty hard with this new strain. So it's not a joke. So it's something he has to pay attention to. Like the market is forward looking, so I'm looking at the vaccine stocks, going up 20% in a week, and
And the casino stocks are getting hammered again.
Which ones?
The casino stocks are getting hammered again.
Probably they're gonna get hammered tomorrow, but they've been looking really weak lately. Here's Win, LVS.
Oh
yeah. What else?
No left. And the Carnival Cruise Line, I mean the cruise lines, the airlines.
I mean the cruise lines are looking really tragic. Airlines, I don't know. Oh, airlines the same. Like travel stock.
Dude, there is just, I mean, what a nasty market. I mean, so you've got a few medical stocks doing well. The healthcare stocks doing all right. I got under Obamacare. I mean, it's crazy not to have a few of those healthcare stocks under your United or Sigma. Damn.
Yeah, they've done really well.
What a tough market. So what are you doing?
I mean, last week wasn't really tough. Actually, last week was actually a really good week for trading, especially Tuesday, Wednesday. There were some really good swing trading opportunities, like in China, in biotech stocks that went up 10, 15, 20% in a few days. So I just took a few swings. Mm-hmm. So last week, there were definitely a lot more long setups that were offering good risk to reward than they are this week. So last week, I was a little bit more aggressive. This week, I probably won't do that much. I wonder if oil stocks are going to bounce, because I see some of them are starting to set up again. So I mean, I'm also looking from a risk to reward perspective. The stocks that have pulled back to their 20 or 50-day moving average, they're tightening up. Like if I enter here at like whatever 66, I can use the low of that candle, like 64.
Yeah.
So I'm risking $2 to potentially make 4, 6, maybe 8. So that's a good risk to reward. So I'm looking for that.
And these don't move as wildly, so you use a little bigger size.
Yeah, so I'm looking for those risk to rewards. And last week there were a lot of them in China and in biotech, and this week I'm not seeing that many. So maybe this week we're not going to really see much. So we'll see.
Yeah, for me, it's a no man's land. I mean, it'll be interesting next week. Tesla, Twitter, I mean, called it off. There's going to be all kinds of dramatics.
Yeah.
I mean, he had to call it. I mean, I get it. It's just such a shit show.
What is it, 34?
Twitter will probably open in the 20s. It's not worth. What is it? What's the
In the
valuation?
20s, really?
Oh,
It's
$30 billion.
28 billion right now.
I mean, maybe. There's no other bidders, so and Tesla, I mean, the stock is a mess.
But Tesla actually did really well. Actually, one of the strong industries last week was, well, two of them, like electric vehicles in solar stocks. Definitely, those were like two that stood out last week. Tesla did well, back above its 50-day moving average, but also we have some, the Chinese one. They're acting constructively, NIO and Li Auto, and what was the other one? XPEV. So there was definitely relative strength in those sectors, but a lot more in solar. I don't know why, but solar stock on Thursday and Friday, like definitely look at this volume, like 2 days in a row, big volume moves and closing near the highs. So if you just go through the stocks in the sector, like Jinko Solar, I think it's a Chinese one, they just closed near all-time highs. And but also the other one, like
People are buying Chinese solar stocks right
but
now.
not only, like ENPH, like this is not a bad breakout attempt here, considering the market. Look at the relative strength line rising, and the Israeli one, SEDG, also showing relative strength. Obviously still a big mess, they're still building bases, but showing relative strength in the clean energy space. What are you seeing anything interesting?
No, I mean, it's very hard. I mean, anything I like is just has, starting to show some signs of a bottom. Growth is really in trouble because it's still overowned, right? Everybody gets excited about, whether she up 10, 15%, looking at a long-term chart. I mean, it's hard to get. I mean, these are not. I mean, these are not strong hands, and rates are not really. Credit spread's still a mess. So maybe I mean we were due for a little bit of a bear market rally. Hopefully it continues. I mean we're so washed out, but there's still so much bad news. So and honestly, this rally isn't that great. So, you relieve the oversold condition, you start getting, more bad news. We roll right back over again. But, Apple's kind of the market. It's just such a big dominant market cap. And, my fear is at some point the consumer rolls over even on Apple and they don't upgrade their iPhones. There's more supply chain or, I hate being negative, but I mean, I don't see enough. I don't see like the right type of fear, but the bears are, I mean, everybody's bearish. But I don't see the setups for long-term. So I think, guys like you who can swing are fine right here. So I'm staying really quiet.
Yeah, for most people, it's just better just to sit out and watch and know that for sure this bear market will eventually end. It could be a few weeks from now, it could be a few months from now or a year. And like the bigger and the deeper the bear market, the more opportunities it's going to create. And if you're in a good position, like in cash, and you're
not just cash, you're mentally.
Yes, financially and mentally, you can 5x, 10x your capital during the next bull market, like in 2-3 years. Yeah. So you just need to be patient.
Yeah. I mean, I'm still like, it would be indexes for me still until I can truly see, some strength, but like this, it'll be different. This bull market's going to be a little bit different. The one that follows this, it's, you know, you're going to have this recency bias of rates. So if rates start to dribble down again, which they probably will, there's still going to be that recency bias of like, oh, remember that time rates shot up and the market fell off. So there won't be that euphoric type of, we're not going to see what we saw post-COVID again, at least, you know, until memories are
Probably for another 20 years. Yeah. Just like, you know, the dot-com boom, the 2000 and then.
I'm trying to just,
yeah,
you know, figure out what's next. But right now it's about keeping my head clean and not taking too big of losses everywhere else. But anyways, have a great week, buddy.
You too, Hart.
And we'll see everybody next weekend.
Yeah.